Welcome everybody, this is Doug McKay with the weekly roundup for the managed accounts on the 10th of June 2010, Thursday. And what we're going to do is we're going to leave this particular post open to everybody, the 4-minute traders and also the people that view the blog. So let's take a look first off at a chart of the SH. And this is short the S&P, betting the S&P will drop. Now, the most important thing we always talk about this, if you forget everything else or these charts don't make sense to you because you're not used to viewing technical analysis, that's fine. All we want to know is what is the trend. Is the trend long, meaning up, or is it down, meaning short? And we ride that trend for as long as it lasts. And if we are incorrect with that trend analysis, then we adjust accordingly. But as of today's close, even with the big run-up of 273 points on the Dow, we're up over 10,000 again at 10,172. Volume was light. As of today's close on Thursday, the overall trend is still short, meaning down. That trend could change within the next 2 trading days. But for our purposes, what we want to do is we want to be able to lock in profit both as 4-minute trader subscribers and as me managing client accounts in our short position, the SH. So again, we bought it back here a couple days before the flash crash. We have moved up our stop. Here's our initial stop here, then we moved it here, then we moved it here, and then our latest stop was placed yesterday just above 51. Now, this trend line I drew in yesterday before today's close, and you can see that the market, specifically the SH, stopped right on that trend line. If it breaks that trend line, we will definitely sit up on our seat, which it could tomorrow. And definitely if it breaks this area here of support, that could be cause for a trend change from short to long. And remember, with the 4-minute trader, we're either 100% long or 100% short. No playing bounces or anything like that. Now, in the managed accounts, we are obviously have a short position on. We'll lock in a profit on that in the event that that rolls over and the trend changes. But on this particular day, which was Tuesday on the 8th, after the market closed, I went in and I put market orders in on the SPY, S&P 500 ETF SPY. We were filled at the open on Wednesday the 9th at 107.26. Today we close at 109.15. So we are playing this double bottom bounce here. If you look at the blog frequently, you could kind of see this coming. We don't know how long or how high this bounce will go. It could be a dead cat. It could stop right here at resistance. It could possibly get to 111. It could possibly go up and fill this gap number 1. We just don't know. That would be a guess. If this goes south, we will exit it in the managed accounts with a loss, and we will continue to ride the short side. There's really, one doesn't work any better than the other. It all depends if the market's trending. What I mean by that is playing bounces in the managed accounts or just sticking 100% with the trend in the 4-minute trader. It's really 6 of one, half a dozen of the other. But it is worth playing a bounce at this point, and it did work today so far. Now, some of the other long positions we have, again, this is our biggest position in the managed accounts is the SPY. We will lock in a profit if the trend changes from short to long in the SH. Just to refresh, we did put on a position in the Russell back on 525. At 63, it's at 64.07 today. Without question, I watched this the other day. If it breaks this low of 60.70, we will be out of that. Again, this is all based on determining whether or not this will be a dead cat bounce. The financials, we're playing both sides of the financials. We'll cut one of those loose within the next couple days. I did add some gold at 121.15. We did anticipate a little bit of selling here at a double top, which has occurred. This trend line I drew in yesterday, we want to see this trend line hold. We definitely want to see 117 hold, which is right above this blue line, the 50-day moving average. If this 117 doesn't hold, we're going to cut GLD loose. All right. GDX, the gold miners. We have been playing the gold miners for about a week and a half. We've been profitable in this, I think, like 6 out of 7 trades. We bought, I'm just leaving this on from a couple weeks ago. We bought it on 525 at 47.93. We closed today at 50.66. Now, here's what needs to happen in the gold miners to increase the probabilities and the odds of this trade working. We need to get above this area here. This is potentially a head and shoulders bearish pattern. This would be a left shoulder here. This would be a head. This would be a right shoulder. You can see that both shoulders, if I put the crosshairs in, are pretty much exactly the same. So what does that mean? In order to nullify this as a bearish head and shoulders pattern, we need to get a close on the gold miners GDX above this candle here. The high in that candle is basically 51.63. If we break down, we will exit this gold miners above our entry of 47.93. So I'll be keeping an eye on that as well. But again, overall right now, as of the close, the trend is still short. That could change soon. Again, in the managed accounts, we are playing a bounce, but we still have a position in the SH, which we will definitely lock in a profit in that. And then for the 4-minute traders, I will get to you guys tomorrow with your specific direction, and we'll have to base that on tomorrow's activity in the market, both price and volume. All right, you guys, that's it. Doug McKay playing a bounce. The trend is still down with the weekly roundup. Also accessible to the bloggers and the 4-minute traders on the 10th of June 2010. Have a great night. Have a great weekend. We'll see you next week. Thanks.